Imagine waking up one morning to find that the rules of the financial game have changed overnight. Your bank, your investments, even your digital wallet, everything is about to get a major update. Welcome to our channel, where today we're diving into one of the most significant shifts in India's financial landscape. The sweeping tax rule changes set to roll out in 2026. Whether you're a seasoned investor, a business owner, or just someone with a savings account, these new regulations will affect you. So, what's driving this dramatic transformation, and what does it mean for your money? Let's uncover the story behind India's bold move toward a more transparent and secure financial future. Big changes are coming to India's income tax rules starting April 1st, 2026, and they'll impact anyone with a bank account. The government is updating these rules to align India's financial system with global standards. Think of it as a much-needed upgrade for transparency and fairness. The old rules can't keep up with today's digital economy, especially with new assets like cryptocurrencies. These updates aim to close loopholes, prevent tax evasion, and ensure everyone pays their fair share. Banks will soon collect more detailed information from account holders, giving tax authorities a clearer picture of financial flows. This unified reporting system helps authorities spot irregularities and strengthens oversight. For individuals, it means a more secure and modern financial environment, even if it means a bit more paperwork. Aligning with international best practices also boosts India's reputation as a reliable place to do business. Ultimately, these changes are about building trust and making the system robust for everyone. While it may seem like a hassle now, the long-term benefits are a healthier, more transparent financial ecosystem. So, what exactly will change for you and your bank account? Let's break it down. Stay tuned as we explore the specifics of these new rules. Starting April 2026, banks will be required to collect much more information from every account holder. This isn't just curiosity. It's a government mandate to create a complete financial profile for each customer. Beyond your name and PAN, banks will ask about your tax status in other countries, joint account details, and digital asset activity. The goal: a 360-degree view of your financial identity, making it harder for money to slip through the cracks. Uniform data collection means the rules apply to everyone, from simple savers to international investors. Expect requests for new documents or forms. Don't ignore them, as your responses become part of your official financial record. This shift isn't about invading privacy. It's about securing the financial system and aligning with global tax standards. Being proactive with your bank will make the transition smoother. The era of minimal disclosure is over. Comprehensive transparency is the new norm. Let's see how this affects joint accounts next. Joint accounts are getting a major overhaul. Previously, only the primary holder's details mattered, but now every joint holder must provide full identification. Whether you're first or third on the account, your information will be reported equally. This closes loopholes that allowed people to hide assets or avoid taxes through joint accounts. All holders must update their details, so talk to your co-holders now to avoid surprises. The goal is total transparency and shared accountability for all joint account owners. Expect new documentation requirements and be ready to update your information. This change ensures everyone's financial responsibility is clear and visible. From 2026, every account holder must provide a taxpayer identification number, your PAN if you're an Indian resident. For NRIs or foreign nationals, you'll need to provide your home country's TIN, like a US Social Security number. This universal identifier links all your accounts, making it easier for authorities to track financial activity across borders. It's a powerful tool to prevent hiding assets or income in multiple accounts or countries. Make sure your PAN is linked to all your accounts. And if you're a non-resident, be ready with your foreign TIN. This small number is now the backbone of your financial identity. It connects you, your bank, and the tax system, both in India and globally. Next, let's talk about digital assets. Digital assets like cryptocurrencies and CBDCs are now firmly on the tax radar. Banks must report all crypto-related activities, buying, selling, or holding assets linked to your account. This ends the era of anonymous crypto transactions, at least where banks are involved. The rules also cover India's upcoming digital rupee, ensuring transparency from day one. If you move money between your bank and a crypto exchange, those transactions will be flagged and reported. You'll also need to declare your digital asset holdings during self-certification. The government now treats digital assets as a formal part of your financial portfolio. Be prepared for more scrutiny and reporting on your crypto activities. Let's see what else you'll need to declare. Self-certification is getting stricter. You'll need to formally declare your financial details to your bank. This includes confirming your tax residency status for all countries where you pay taxes, along with the relevant TINs. You must also declare beneficial ownership, who truly benefits from the account, especially for trusts or company accounts. The aim is to prevent people from hiding assets behind complex structures. Digital asset holdings must also be declared in your self-certification. Your declaration is legally binding, so accuracy is crucial. Banks rely on your statement to fulfill their reporting duties. Falsifying information can lead to penalties, so take this process seriously. The new self-certification gives tax authorities a comprehensive view of your finances. Next, let's look at the new tax forms you'll encounter. The government is revamping tax forms to match the new rules. Expect new numbers and consolidated forms. For example, Form 16, TDS Certificate, becomes Form 130, and Form 26AS, Annual Tax Statement, becomes Form 168. A new Form 141 will consolidate several TDS return forms, simplifying property transactions with co-owners. These changes reduce paperwork and make compliance easier for taxpayers. Non-residents applying for a PAN will use new Forms 93 and 95, providing passport and citizenship details. The updated forms ensure robust identification from the start. Familiarize yourself with these new forms to avoid confusion. The overhaul is about making tax reporting more logical and digitally integrated. These practical tools support the bigger vision of a transparent tax system. Now, what if you don't comply with these new requirements? Ignoring these new requirements isn't an option. Non-compliance has real consequences. If you don't provide the required information, your bank may restrict or even freeze your account. Banks are legally obligated to collect this data, so they'll report non-compliant accounts to tax authorities. This could trigger further scrutiny or investigations into your finances. Providing false information on self-certification forms can lead to penalties under tax laws. The easiest path is to comply. Keep your details updated and respond promptly to your bank's requests. Compliance keeps your account running smoothly and avoids unnecessary headaches. Let's wrap up by looking at India's role in the global financial system. These changes aren't just about India. They're about connecting to the global fight against tax evasion. India is aligning with international frameworks like the Common Reporting Standard, CRS, joining over 100 countries in sharing financial account information. When you provide your foreign TIN, that data can be shared with your country of tax residence and vice versa. This global web of transparency makes hiding money offshore much harder. Adopting these standards boosts India's reputation as a transparent, reliable financial hub. It attracts foreign investment, strengthens the economy, and builds trust with international partners. For individuals, it means a fairer, more secure financial system. While the new rules may seem inconvenient, they are part of a necessary evolution. The rules are now the same whether your assets are in Mumbai, London, or Singapore. By embracing global standards, India is helping build a more just and transparent financial world. Prepare for the future. These changes are here to stay. Thanks for watching and stay informed. If you found this breakdown helpful, don't forget to like this video, share it with your friends, and subscribe to the Wealth Blueprint for more clear, actionable insights on India's evolving financial landscape. Hit the notification bell so you never miss an update and stay ahead of the curve as the world of finance transforms. Together, let's build a smarter, more informed future.